Hello, everyone, and welcome back to another episode. My name is Jordan. I'm a Millennial Investor, and today we're going over the most recent monthly update for my portfolio and how we've done so far performance wise. My positions that I had last month are for the most part still open, not a whole lot has changed, and we've made some short term trades that have luckily worked out. But right now, my portfolio sits at 50,528, or excuse me, 50,248. But as of the first of the month, it was at 44,000. We had a couple of recent positions that skyrocketed, but basically, this is where I'm sitting at right now. Currently, I still have my 300 Amazon shares, which makes up about 39% of my portfolio. Slightly more than that, we have Dropbox, which makes up about 1,500 shares. And then we have IRobot, that call position, which I've mentioned in previous videos. They expire in June, about a month from now, hopefully going through. If that deal with Amazon goes through, where they'll buy IRobot, that position will either go to zero or will basically 10x from where it's at right now. And then we have Nvidia, my short against the market. I have some puts against Nvidia, just as a hedge in case the market goes down, and I think the company's pretty overpriced right now. So far, in terms of performance, now let me go ahead and actually pull it up. This is live. This is as of today. This is not as of May 1st when I normally make the videos. I'm a couple days behind, so stick with me here. But so far, year to date, we're doing very good. As of yesterday, on May 5th, we are up 29.3%. So 30% year to date returns in the first 4.5 months of the year are pretty incredible. And if you compare this versus the major indexes, we had the S&P up 8%, the Dow up 2, the Nasdaq up 17, and then the Russell, which is basically flat. Now, if you look on my bar chart here, this is actually as of the 1st. So if you're curious, as of May 1st, this is what it looked like. And then we had a recent jump up, mostly due to my short of Sunrun, which I want to mention previously in my most recent close positions. If we go back just since April 1st to today, we've had a couple positions in general that have just really done well. So first off, we had a short position that did not go well, which was Nvidia, and I closed that out mostly to make shorts in Elf Beauty and Sunrun, and both of those made around $2,000 to $3,000 each. So I got back all that profit, and so far we're doing good, and I think it's likely going to lead into more future short positions and future gains as I short both two things. One, as I short Nvidia more moving forward, and potentially short Sunrun again. And I'll briefly go over all these positions. The one I have open, just a very quick overview. If you haven't seen me before, I would like it if you subscribe. I would encourage it. And in the meantime, I'm going to show you guys how I invest in my portfolio and why I own each and every one of these companies. So thank you so much for tuning in, and let's go ahead and get started. So we'll start from the biggest. We'll go ahead and start with Dropbox, and I'm using Qualtrim Insights here. This is actually Joseph Carlson, another YouTuber. He has great software, and you can see yesterday that they had a fantastic day, up 8.61%, and Dropbox just reported their quarter one earnings. I don't think it's shown live on this quarter yet, but if you look here on this website, they've continually grown revenue each and every quarter, and their free cash flow is generally trending in the right direction as well. But not only are they growing top line and bottom line, but they're also buying back a lot of shares, as those shares outstanding are generally trending down over the last several years. And despite all these good metrics, you can see that the stock price has done absolutely nothing. This is since the company went IPO back in early 2018, right around 5 years ago. It IPO'd right around $30, and today we're at $21. Now, just because you see that stock price going down, you would automatically assume that this company sucks, that they're not doing good. But you see that, in fact, even if we look at this on an annual basis, the company is growing free cash flow and revenue every single quarter without fail, and is trading at a rock bottom valuation. Forward PE on this one is under a 13. And the price of sales is about a 3.6. This is one that has a free cash flow yield. A free cash flow yield in the double digits, right around 10%. And so it's one that's too undervalued in my opinion. I think they'll keep growing. The market has underpriced them way too much in my opinion, and I think they'll keep growing. Next we have Amazon, and I've talked about Amazon a lot. And the funny thing is, if you look at the total gains and losses on these, I'm both about break even. I'm down 1% all time on my Dropbox shares, which I've been holding these since, I bought almost all my shares in February and March of this year. So it's still a relatively new position. Then Amazon, what are we at? Probably around a year now. Let's see. Some of my oldest shares we hit just a year on. So I bought some in April of 22, June of 22, and then right at the last day of the year of 2022. And some of these shares have not done so well, down 15%. Some are about break even. And then the ones I bought back in December, I bought right at rock bottom. If you go back to Qualtrim here, let's pull up Amazon. Let's look at its share price where it was during those December lows. Let's pull up the last 6 months or so. And let's go back to December. What day did I buy it on? Right here, December 30th, the last day. You can see that was pretty much right at rock bottom. If you look on the 5-year chart, we were buying those shares right here, right at the $80 range. So those were perfect timing, and that helped lower my cost basis. But over time, just in general, we're basically dead even. We're down $100 on this $31,000 investment, and Amazon is one that I think will do great over the long term. It's so far done okay in terms of its revenue growth over this last couple of years or two when you have recessions holding this company back, but its free cash flow has really struggled. The free cash flow was originally growing and growing, and now it's gone farther and farther into the negative, and we're finally hoping getting to a point where we'll turn this around. Because previously, this company was growing free cash flow basically every single year. In 2020, we had $26 billion of free cash flow, and then the last 2 years, we've had growing losses. Not 14 billion and 16 billion of positive free cash flow, but actually negative. Until this company has depleted a lot of its cash balance. You can see right here, if you look at the balance sheet, the cash pile has shrunken since those 2021 highs of around 100 billion, now only having 60 from all these losses. However, you see revenue growth is still growing quite considerably, and this is also boosted a lot from the main reason why I own the company, which is AWS. Amazon Web Services is one that is still growing very nicely in the double digits. It's slowed down a lot. In the most recent quarter, it only grew 16%, but just the dominance of Amazon with their advertising business, with their Amazon Web Services division, with their international markets that have not really expanded yet, the pricing power I think they're going to have domestically with their online services, and just all things Amazon that they are doing to take over basically every single market. Typically, a lot of things that companies fall behind on, not innovating, not pivoting, that is not something Amazon does. It is one that will continue to grow in some way, shape, or form, both domestically and internationally, in pretty much every segment, in my opinion, over time. So this is one that I'm going to own. It's one that I am confident it will still do good over time. While I don't think the price is rock bottom cheap anymore, right now when I was buying those final shares, they were in the 80s. Now we're above 100. They're not rock bottom prices anymore, but it's definitely not expensive. While the PE may be misleading here, of $43 or 43 PE ratio, I think over time it'll look cheap as the company grows its profitability quite nicely. Next up, we have my 2 short positions, or my 1 short position, then my call options. IRobot, really simple. Long story short, I think the deal is going to go through, and June 16th is when these expire. They will either go to zero if the deal is not approved by then, or if it does go through, this position will be worth somewhere in the ballpark of around, around $30,000 if I'm doing that math correctly. Around 35,000. So this will make a lot of money if it goes through. If not, it'll go straight to zero. And then finally, we have Nvidia, which is my puts. Basically, if we look at Nvidia, let's see what the company did last year, just in terms of revenue, not actual profitability, just top line revenue. This company did around $27 billion in revenue, which, by the way, shrunk year over year, or actually didn't shrink, it was flat. It grew a teeny tiny smidge. 0.2%. So basically flat year over year. Now, while this company may be growing in the past, I don't think it's going to grow nearly as much in the future. But even if I'm wrong, if you take the company's market cap, right here of $708 billion, and divide that by 27, the company's current price to sales is 26. 26. So a lot of people will often argue companies like, let's say Tesla, for example. A lot of people will argue that Tesla is overvalued, and I'd be one to agree there. And if you look at its price of sales, they currently have about $81 billion in revenue in the last year, but its price to sales is only around a 6.6 to be exact. A 6 is nowhere near an almost 30 price to sales for Nvidia. There are many companies that do not demand a 30 PE ratio, which is earnings, actual profitability. This company is almost demanding a 30 price to sales ratio. And this is mostly because people are hyped up and excited about AI. But honestly, I don't think that this is nearly being priced at the level that it should be. So right now, with a company sitting around $286, almost a $300 range, that is nearly an all-time high for the company, and I think it's likely to come back down. Now, the good news is it's the smallest position in my portfolio. It's only 8%, and it's about a $7,000 short position right here. We just opened it just the other day. And if it doesn't work out, it's not massive. It's not going to hurt me if the market keeps going up. But if it goes down, this will help help kind of cushion some cash, get me prepared to buy the dip just in case things go down. But these are the companies that I currently own. This is how we've done so far here in 2023. I'll continue to keep you guys updated. I'll let you know of any buys or sells that I'm doing so far in 2023 and moving forward. But other than that, guys, things are going great. Life is going good, and investing seems to be going in the right direction as we just now got right back up to over $50,000. It's crazy to see. Just a couple years ago when I made this YouTube channel, my initial investment was $1,500, and now we have a massive amount higher than that, over 30 times that amount at 50 grand. So we're halfway to that $100,000 mark. We're 1/20th of the way to that massive $1 million mark that we're trying to get to. But so far things are going good, and I'm still enjoying my path of investing. So thank you guys so much for watching, and I'll catch you all next time.